Okay, welcome guys. Let's do a quick sound check. If someone could, type in the chat screen whether you hear me, and then two, my family's got the TV going on in the background. If it's loud, let me know if you guys hear that, if you hear the conversations on television. Otherwise, I won't worry about it, but I can have them turned down. Cool, no TV, awesome, perfect. All right, so let's go ahead and get started a bit early here. Let's see, we've got 16 in the room. A little bit thin. I'm sure people will join in a few more minutes. And then we have a special guest today. That guest is JAppel, who a lot of you guys know from the trading room. Wanted him to have a chance to talk about his approach. So I hope that's exciting to you guys. And I know a lot of guys, a lot of folks are following him pretty close. So content-wise, in terms of what I want to go through is I'm starting off with the bullets that came from Hoser7 on the site. He's the one that actually jump-started this webinar idea. The basic premise is that whether we are going to start third waves or not off the 1-2 setups in cryptos that we have seen off the April lows to May highs and come down in wave twos into these May lows that we've had recently in May 28th. We certainly don't know whether this bottom is confirmed, but the reason for this webinar is to start to plan what to do when we start to see the rally. And I know for sure, I heard on the board that a lot of folks didn't take May profits as Zach and I in particular, and JAppel as well, were saying that we had a 5-wave pattern completing and possibly could correct, and we did. So we want to make sure people are not stuck in that position at this time. So we've got these bullets here. This is from Hoser7 again. One of the active premises here is that we could be coming into a major top in the cryptos if we do rally from here. We don't know whether it's this degree that's coming or the following, provided that it does come. But we want to, so at least for me, I'm potentially in this third wave if it happens, taking almost all of my portfolio to zero, except for a few positions in key coins like EOS, Steam, potentially Monaco still. ZEC is another one, Zcash. Other than that, I'm going to be going to zero. So what do we do here? So I'm going to talk about this levels to tranche out and how to divide up tranches, at least according to my trading plan. And then how much the profits we take out at each of those tranches. Another bullet here that isn't included is really the rotation trade. So I'm going to try to cover the rotation trade because sometimes those profits have another place before the final top comes in with laggards that we always see in every rally and every asset in any trading. So we'll talk about that a little bit, and I'm going to bring up the chart that I shared on the website about a week ago, or maybe a little bit less. It was a Bitcoin cash chart just to talk about where you rotate profits from one to another. And then what do you do with it? What do you do with that cash? I think I'll just cover that right now. Or I'll cover that when we hit 4. So this is kind of the basic level content. I'm going to give, so we got 26 now. I'm going to give a couple more minutes for people to come in before I really start hitting this heavy. And then I'm going to look for JAppel and see if I can get him up into the presenter level. Let's see. I don't see him on yet, unless I'm missing something. JAppel, if you're on and I'm missing you, just text me on the site. So hopefully that hits everyone's needs in terms of this profit taking. And then if there's any other questions, comments about that, I'm certainly going to have time to take it in the end. I'm going to try to hit about 30 minutes myself, and then try to get all of what I want to say done, and then JAppel can take his time, and then I've got an hour and a half on this just in case. All right, and JAppel, are you on yet? Do I see you? He's texting me, so. All right, while he's answering me, I'm going to go ahead and get started with um, talking about this content. So let's cover real quick the what do we do with profit taking. So Hoser listed here USDT, fiat cash, etc. We'll cover that, but I think also what we want to do is think about rotation trades. So I'm not going to cover rotation chart trades until I get into this a little bit further, but that'll be one place for profits. But I think the other areas to consider are, of course, fiat cash, and we've got Kraken, Gemini, Coinbase, all with fiat options, Coinbase, GDAX. And then I think further consideration within that is that, is as far as I understand, but you do need to verify, Gemini and Coinbase have FDIC insurance on fiat. Again, verify that. I'm pretty darn sure that Gemini does. So, and that's up to about 250,000. So that's not going to prevent a user hack, but it is going to at least make your money safe against failure of the company, et cetera. So I think that's a benefit. I think also, so I don't like Tether for long term. I tend to kind of believe the scam stories on USDT because certainly that organization has refused to do proper audit on their holdings, and that's a problem to me. And then we have this other little character token showing up, the True USD, TUSD on Bittrex has got it, and that's a token that seems to be an organization, though I need to look into it, that has really signed up for strong auditing. So I can't verify that. So that's not a recommendation, but something to consider. And that token, as far as I understand, and I'm planning to look into it if the third wave kicks off, can be, it's an Ether token, so it can be put onto a ledger or something else via MEW. So JAppel, when I see you on, I haven't seen you yet. I have to go through the user list here, but I'll promote you up and it should work out okay. So hopefully we don't have any technical difficulties there getting you on. So just letting you know. He's messaging me. So we consider that. So USDT, I don't like it. That's an open non-recommendation. I can do those legally, but the TUSD I think is worth at least looking into, and I can't give a personal recommendation. Also, I should say in all of this, this is just a technique that I'm sharing here. This doesn't mean, especially for the public that has been invited openly, this is not by any means a recommendation to do crypto trading, to even use my method, but it's a method that we use, not just myself, but JAppel uses it with some modifications, and that is the Elliott wave theory and Fibonacci sequences that work within those fractals to target turning points in the market. So that's all of this is based on that work. Just disclosure, none of this is a recommendation for crypto trading or anything of the sort. All of this also works on, if you understand Elliott wave theory, it also works on normal assets. I use the same thing in trading stocks, basically. No difference. It's just we're dealing with a very volatile asset in cryptos, and so we see a lot of extensions in the rallies that that can surprise from a realized volatility perspective. So anyway, so back to fiat, and then personally also Bittrex has opened up fiat trading. It looks like they only have a BTC USD pair. That's a real. They've disclosed their banking relationships. It appears that it's not open to all people in all states in the United States because of licensing. It is open to me as a California resident, and so I'll definitely be using it. I think there was mention that it was institutional. I saw the pair open on my Bittrex account, and I'll be trying to make a trade with it for sure for some of my holdings. And we'll see if they close me down. I think they were saying that institutions are going to use it first. So maybe even though I have the pair, I can't use it. So in summary, personally, my approach: one, I'm going to use my Gemini account and my Coinbase account to hold fiat. Some of it I'm going to send back to my bank account to go trade other things. That's my personal plan. And I think that the top in cryptos is coming to be a major one. And I'm going to reduce my overall holdings in the long-term crypto charts. So I'm going to be banking some of that. And we see bull markets emerging in gold. And I like trading Forex. And there's a lot of great stocks right now as we've had a little bit of a correction, and we may get more. But I'm seeing. I'm also very into marijuana stocks. I have a little bug there, but I don't have a whole lot yet. But I see a bull market potentially emerging in marijuana stocks, so I'm very bullish. So those are areas I'm interested in investing, and some of that money is going to go there. So, and then and then there's just living and using trading income to live. I always have to do that. And then the rest I'm going to hold into those accounts personally, so that in case I'm wrong about, well, I don't think this degree is the major top, but if I'm wrong, great. If I'm right and we are going to see more, then any corrective wave, I'll start buying again. So I want to have it handy on the exchanges, Gemini and Coinbase, so I can go back into the market. I also have been using the Abra app, sorry, and Abra is pretty interesting because it has fiat based into it, and they have banking relationships, and I've been able to toss money back and forth from my account. I don't think any insurance, so I'm not going to leave too much there. And then I'm gonna read up personally, again, hating USDT. I'm going to read up further on the True USD token and see if that's something interesting that I want to hold. I'll make my own assessment of it, and we'll make no recommendation whether that's a good idea or not. So that's kind of that, covering that. So let's talk about the next aspect of about this lesson or webinar, and that's really maximizing profit. And what's key here, and it's actually the first difficulty to me. I have no problem with dealing with the emotional aspects of all of this. I've been beat up in the market enough over my 2 decades trading that I know to take profit. And honestly, sometimes I'm better at taking profit than I am at getting that lowest entry. I think I've seen JAppel work. I mean, I'm partly affected by having to run the trading room, but I've seen him really be patient with grabbing some of these lows, the further lows that we've seen. And certainly we don't know that we've bottomed, so that'll pay off for him. So that's one reason I wanted him to speak. But I tend to be a lot better at taking profit religiously and avoiding a lot of pain right in the immediate onslaught of a top. Just tends to be what what I can feel like I can pat myself on the back doing well. And so we'll talk about that. And then so the first difficulty is identifying the top. And so I'm going to pull open fibs and do charts. So it's a little bit going to be a little bit nebulous in this slide, but really the first sign of any top usually in Elliott wave is a good fourth preceding wave. I should say wave 4. Let me change that so you guys see it. A good wave 4 preceding the top. It is true sometimes we see spike highs that really are malproportioned. I mean, I think what we saw in both MCO and PRO in the last few months is an example of that. But it's really actually not that common in the marketplace. And usually we see a healthy 4. And this is another reason why I don't think the Bitcoin had topped ultimately unless we break 3,000. And that's because we really have not seen a very deep 4 in Bitcoin. Now, Bitcoin's 4s are shallow, but it would be obnoxiously shallow if we had seen a major top, a fifth wave of the third wave, of the larger third wave. Already, but I can be wrong, and again, breaking 3,000 is a key hint. And usually when I say a good wave 4, usually I mean that we hit the 382, retrace of the length of 3, and preferably not breaking 0.5. And if we're down on the 0.5, in cryptos we have a very nice deep wave 4. And so we can assume that after going that deep, provided we don't break the 0.5, that we have a good 4, and the next top is the top. It's just a nice key signal that should get you ready. And we can talk more about, I think I've done a video on using my fib tool, and I can double check it. And I explain basically how to do this in TradingView if you're not using it. And I'll show how to do it here live in Motiview Wave, so you guys see that. And then it's also that deep wave 4 that brings that technical divergence. So we're going to look at that a little bit in charts here. But we really should see technical divergence at tops. The challenge is what time frame. I put one time frame, and I mean question mark, because that's the really difficult thing, is setting your chart so that you see the right divergence on what time frame. And then I always reference the next degree to figure out where tops are, because it's long-term charts that really pull on the fractals in the shorter time frames. And it's, as a lot of people have figured out painfully, is I'm trading very long term in cryptos right now because I'm running the trade room. So, but it's really because I trust longer term fractals even more. They tend to be more reliable, and short term fractals tend not to be. And then you can also consider buy stops if you're not sure. So if really, I would advise trying to take profit in key regions, but you can use a buy stop that pulls you back in the market and breakout. The issue there is, which I'll talk further about, is that if you do that, you can get a false breakout like a B wave. Now, the good thing is a high B wave usually is a suggestion that we have further to go ultimately, but not until after a deep C wave. So we'll talk a lot about that a little bit. And then, I use this trade plan. So we'll back on slide 3, we'll go through all that in charts. And so I'm going to start to cover that. That's the difficult part, is identifying that top. But how do I personally do this? So I take 30% off religiously at top of thirds. We have a market right now that if we actually were to launch into a third wave, we have some big laggards that it's really that 30% is going to go into other trades actually in this situation if everything starts going. We saw this in September and October. We had huge rotational trades, and a lot of my money was made that way by dropping off the third wave of one thing and entering, say, the third of third breakout in something else that was previously lagging, then catching up. So that's a rotation if possible. And then I will send, if I really have not a place for that money, I'll go ahead and try to trade the wave 5 and put half back at wave 4 bottoms. And if you go back to the previous chart, that's really where price retraces the third wave, 382 to 0.5. And I will get the heck out if, especially if there are other trades, if the 0.5 on the degree that I care about. So that's the other thing with Elliott wave, is you can trade a micro chart, but I tend, as you again notice, that I have a longer term perspective. So I'm only trading these larger degrees right now. And when I have a short term break of 0.5, the wave 0.5 retrace of wave 3. Let me say that real quick. I'll stop out. So at a break, and again we'll illustrate this, and that's my stop. So I'll talk about that, and then at the top of 5, anything is short term, I'll get out at the top of the wave 5, and even start to pair back early, like third of 5, the micro third of that 5th wave, just to make sure I don't get caught in the top, because once it goes fast. And I really don't think hanging around too much at the 5th wave is really that smart. So I'll get out of it completely of short term. So if I'm looking for a longer term fractal, then it'll only be a partial, because I trade in long-term tranches and shorter term tranches and short-term tranches and sometimes scalping tranches every once in a while. No, it's pretty rare these days. So I have all of my trading is planned in terms of what degree I'm trading. And when I'm done with a tranche at the 5th wave and it's the degree that I'm done with, then I'm out. So with that tranche, it doesn't mean I don't have that coin still. It just means that I'm not looking to make any more short-term profits or profits for that degree at that point in time. So hopefully that makes sense. So let's look at charts real quick. Let's see. So places to put profit. I didn't even finish that, so let's delete that, but I mentioned that again. I'll be putting fiat that I don't want to take into my bank account and trade something else. I'll put that in a Gemini and Coinbase. So, all right, so let's look at charts real quick. I'm going to pull open Bitcoin Cash because it has that profit-taking chart I'm talking about, and it also frames up the fibs that we're talking about. All right, so again, I'm going to remind, and this is especially for the public that's come in on this, when we're doing Elliott wave analysis, what I'm doing here, if you look at this fib tool, it's got 3 points on it. So the bottom of this wave 1, top of wave 1, and the bottom of wave 2. And so when in our Fibonacci work, we're looking for wave 3 to target anywhere between. It looks like my fibs got a little bit off here, but anyway, between the 138 and the 178 is very typical, and then but 161%. So I'm using points, but 161.8% over here on the right side is where it's normal, and then the wave 4 is in this. In this 100 region, usually the bottom of this green box. So real quick, so we keep that in mind, and it's again. My trade plan says in this wave 3 of this degree off of this one too, I'm taking 30% profit off. and then I may add back half of that at this wave 4 here. And it's quite often that once this 3 of 3 kicks off, we're in this, meaning we've had a 5-wave move to 1, 2. This runs really fast with very little retrace. So I really don't mess with taking a lot of profit through once I have heart of the third, supposedly going. And you usually see volume come on, and you usually see very tight price action, and I know it from the fibs that were in it or should be in it. And if I don't see the tight price action, something's wrong. But it's there where I just let it run. And I usually also don't take profit until we get to third, because it's quite often even this 4 of third tends to be very quick and tight. So I really just don't mess around. There was actually some interesting work done by a previous analyst who's not with us any longer, which he would run the 20 average, and I think he would use an hourly on a chart like this, or 2 hourly, and the 20 moving average would be his boundary for getting out, instead of for this part of the wave versus using fibs. I mean, any of these methods are fine, but personally I tend to ride that, and then I'm waiting for that wave 3 top in that zone, and that's basically looking for technical divergence to show up also in this zone. And again, 30% off here, half back for here, and then I take profit here. Now the other thing, again, I want to just teach you in terms of using a stop. So if you have, let me go to. So we're going to go. So we have 5-wave move here. And let me label this real quick as I see it, subwave wise, just so we can see this 5-wave fractal here. Now, if you look at what happened here was, in terms of technical divergence, is that we had nice technical divergence here. It's not really quite diverged as much as a lower peak, but it's pretty flat. So we had a nice flat. Let me increase that size. So we had a nice flat MACD, just a little bit peaky on the high peak in the second peak right here. But for the most part, it's pretty divergent. Let's spread it out. And that was a sign of a top there. But again, this is not the top that, here it is right here. So this is not the top that a person was concerned with. I was concerned with getting out at this top. But this was an early warning that we would see the wave 4 begin there. And you can see for sure, very clearly, that we had a divergent top, a very divergent top of the 5th wave. And that's exactly what we're looking for. So this is the first warning. Profit should be taken. You could add back half of it here. I didn't trade all this because this wasn't a degree I was concerned about, but this is something that you can do. And then take all of it off here if you want. Of course, I've been expecting another degree, and I didn't touch anything in Bitcoin Cash at that point too before I call. And I'm still in that holding, but that's okay. On a degree that I'm trading, but if you're much more concerned about short-term profit, you would definitely take profit. So, and then again, fib-wise, and I talked about this in the previous, and I want to make it as crystal clear as possible, and we can review again later, is that in a progressing third wave, we never see 0.5 being hit. So if I was to hold so I've got my fib tool pinned to the bottom of 2, and there's our 1 of 3 right there. And then as price is progressing, we never see the 0.5, which is this fib right here, ever hit. And that's 0.5 is our stop as a third wave is progressing. So if you ever go below that 0.5 strong, you need to look for retrace to get out or decide to get out right away. And as you see, we didn't quite hit 0.618, which is 382 retrace of this progressing third, which I mentioned on that slide, but we got close enough. And so, and further, we also went through the 236, which is marked by a 786 when I use this tool. So we retraced 236 of 3 here, and that's a signal that 4 has begun, and that's deep enough to consider 4 complete. This one was actually shallow. And then, so again, what do we learn from here? One, we can stay in, so another theme I wanted to encourage you to consider is staying as long as you can in a third wave will get you maximize your profit. That's part of it. Second is, how then do you take profit? Well, divergence will start to show up at the peak. So you want to watch for the MACD. The trick here is, again, what time frame do you set your chart? Let's see if we go to a smaller time frame, we may see even more divergence potentially. So let's see. It's pretty flat even in the 15-minute, but you get the point. So this is enough divergence to warn. So peak number 1, peak number 2 is higher, but MACD is flat. So that's a warning. And the reason it's so difficult actually in this situation is that this was a very extended third off of such a shallow one, wave 2, which again, per my post last night, is very common in cryptos. The 1-2 doesn't often pretend the real size that we'll see in the third. But once we progress past the 618 extension, we know we're in the third, which 0.618 was around here. And we know we're in the third, and we can again use our fib tool to simply ride up price as it goes. And when you get a hit of the 236 as a warning, and really hit that 236 or get close, sorry, 382, which is right here, then you know that your fourth has happened. And then finally your next peak is going to be, now it's always a trick to go exactly where it is, but your next peak, which usually on this fib tool sits close to the 1236 to 1382. So we pretty much got there. It wasn't a direct hit. So it was a little bit short in my term, but so we can actually put a box. Once we have our 4 and know where it's at, we can put a box right there in that fib tool to pinpoint where the 5 would show up. But I'm personally starting to take profit off down here when we have a breakout, because you've made your money if you've gotten down here. I'm not really trying to play fifth so much most of the time. So hopefully that makes sense in terms of identification of a third wave. And again, if you want to maximize your profit, you ride as much of the wave 3 as you can, but you religiously take off as much profit as you can once you start to get signals, which are divergence, are a breaking of the 236, and particularly after you've gotten close to the 382, the next peak should be your last. It's usually your wave 5. So hopefully that makes sense. And again, if you're, I always recommend Motive Wave very willingly as an Elliott Wave tool, but you can also do this in TradingView, and I explain how to use our fib tool that we coded for TradingView on my website. And then if you need the code again, I'll help you search for it on the site. So hopefully that all makes sense in terms of taking profit. So again, in this I've covered a standard extension. Let's talk about rotation real quick, which is again the option. I talked about this on the website. But now imagine these arrows are actually on 2 different charts, and that's confusing. But let's get this shrunken again. So inevitably, when we're starting a major third wave rally in a market, inevitably you have some laggards. And we're certainly, if we do kick off a wave 3 in this situation, we're going to see it. It's very obvious at some charts. We got some charts which are heading towards the 618. Get rid of this. Heading through the 618, which is usually our 1 of 2, and we have some charts that aren't even breaking 146 or 236 extension of our wave 1, 2. So we're going to have some laggards. And so when some of those ones that are hitting the 618 really kick off into the heart of the third, we should see them accelerate into that third, and then we have a profit-taking opportunity either here if you want to, again, but I prefer here. And what you're doing is you're rotating from charts that are pushing into that 618 zone. Maybe you start in the 127 and starting to take some of that profits and roll over down into the 236 on another chart. When you've got a chart lagging. So some of the rotational trades that I foresee right now potentially are Ethereum is running ahead. It only retraced half of its wave 1 so far for wave 2. That the bottom looks tenuous for sure, but if it does come in, it's going to be kicking off through the 618 very soon, and it'll be one of our first up here. I think GNT is another that is pushing. And then you have laggards like Steam, which is really amazing chart on a long-term fractal, but it's lagging in a short term. I think that some of the diagonals that we have could be good. They're just hard charts to trade, like PRO is in that camp. but it also broke April lows, so it's a little bit tenuous. NXT is one, XEM is another. Those are all laggards, and now we've got even ZEC that's lagging because it kind of fell through into a diagonal count most likely. So we'll have those rotational trades for sure if we kick off this, and that's a great place for the first profit taking. And then as we start to see too many charts come into key areas, then we really know that we were going to have a major top come in, and so we got to really start running from the market. So hopefully all this makes sense. I hope that I really always advise people to learn at least some basic Elliott wave trading, Elliott wave analysis, at least this basic level use of fibs as I roll I pin the 0 to the 2 and roll the 100 up so I can see what fibs the market's hitting and get that early warning. If you're not doing that, then you can always ask me on the site for where we're at, what fib system I'm using, because I use two fib systems. I use this 3-point fib tool to project my thirds, and then I use as I move into the thirds, I start to use the extension tool to measure the retraces as we go. And I color code them on the site. So the colorless fibs are the projection, because I tend to always have them on the charts. And then when I use the pink, I'm usually using that system of measuring the retraces. And then when I'm using the blue, which you've seen, I'm just looking at retraces for a landing zone in a correction. So those are really, it's kind of color coded. I've said that before, but I'm just reiterating that. I think, let me see if I can get JAppel on. And then I think before I give it to him, let's see. I don't see you. Oh, there you are. Okay, let me see if I can get you promoted. I'm going to get you up there first, and then I'm going to get you up at panelist. Let's see. Okay, yeah, so you're up in staff now, so I can make you presenter pretty easily. So that's awesome. Worked. Technical difficulties gotten through. Okay, so before I hand it to JAppel, any questions from me? And again, I hope I covered all the content that was asked for. If anything else you think I'm missing, please let me know. Anything you want me to clarify, go ahead. Okay, so one question I have is, does ABC have rules for identifying them, like wave 1, 2, 3, 4, and 5? Okay, so well, that's a long. We actually cover that in webinars on the site. Let's see, how do I cover this in like a succinct approach? So usually in a wave 4 correction, for instance, A usually retraces 2, 3, 6, the first one. But sometimes again that can be all, especially in Bitcoin, it can be all of the wave 4 because it tends to retrace 2, 3, 6 of the preceding wave 3 in all time frames. But in equities and in most other cryptos, that's the case. Sometimes you get a deep 1 to 382 directly, and then get a flat, say B up, and then C goes right back to the same spot or a little bit deeper. So that's honestly correct. All corrective waves have such variation, and it's why it's so difficult to catch bottoms. We can look for divergence. We look for a clear C wave first before we enter, and then we look for divergence in the C wave for the 4 and 5 to hit and to enter. And then the problem sometimes is what degree is your C wave. So do you get another B and C afterwards? So those are all difficulties of landing the ends of corrections. But honestly, when you get the third of a C wave down, it's pretty easy to identify the 4 and 5 in a C. So whether that's the final is the problem. So hopefully that's clear. But the other thing you should know is when you know you have your A wave complete, which if you look at technicals during an A wave, it is the strongest technicals usually. Divergence starts to show up in the C, so an A will have a first thrust, and the reason for that is because you're moving up and now you're moving down suddenly, and so your technicals kind of unend, meaning they're reacting to the volatility, so they'll bottom out very fast, and then you'll know the B wave by its action, which is really choppy. And then the C wave, you'll start to see the divergence show up in the correction, particularly on the 4 and 5 at the end. So that's kind of the way to identify it. Then the other thing, again, is once you have your A wave and you have your B wave top, which B waves can be all over the place, your C wave is usually 786 to 138 usually as a boundary. We have some long ones sometimes in WXYs when you have a Y wave, not a C wave, but the C wave is usually that proportion to your A wave off of your B wave top. So that's the 3-point fib tool. So that's so when we're looking for corrections, we're kind of asking where the A equals C is, and then next we're looking for a projection off the C, and then finally we're looking for divergence. So we kind of work all those things in tandem on a chart, try to find out where a bottom is likely to show up. So hopefully that helps. And then let's see, what are the numbers of the MACD? I can't read. I just use the standard. I never even change settings on. It's 1226.9. I never even change the MACD. There's rarely on any technicals do I use anything but basic settings. There's a couple, like I like to use the RSI in the 4060 instead of the 3070 for a particular reason, but more different. Well, I can't go into that, but that's probably the only technical I change. What is your opinion about blockchain shares? Blockchain shares. I don't know it, unfortunately. If there's a symbol you want to throw it in there, I can weigh in on it because I tend to know symbols more than names, unfortunately. Any good books recommendation on Elliott Wave? Okay, so you want to learn Elliott Wave. First, you have to take in Robert Prechter and Frost's Elliott Wave principle. It is my opinion that they did a very academic job on it and not necessarily got the application. I really think we are the best teachers of the application on the site. And Garrett, one of our analysts, have done amazing webinars, particular with some from Avi and others on the subject. And we get down to all of the, so Elliott had looser rules on Fibonacci's, and Avi, who founded the site, had very tight rules on Fibonacci's that he did a lot of study on, and they pan out. So that's what we teach on the site. It doesn't mean we always call bottoms. It just means we identify key areas of resistance to support at all times through Elliott Wave. And so we can see how price interacts in those levels and see if the market's going to turn there. So, and then we also have, we also can clearly invalidate our own counts when our view, when Fibonacci's prove our view wrong. So that's what we teach. Any other questions for me? Let's see. Well, we got some more. Were Bitcoin and Ether bottom hit or not yet? Okay, so just very quickly, we don't know. We haven't gotten 5-wave up past 618 of the May peak to trough. We want to see that overcome, and that is really on this chart is the one extension. I don't want to go through charts too much, so I'll just do this one question. So this green line to me, 5 waves up through the green line is at least a signal, but it could be a structural, but it's going to matter what structure we have to get impulsive. So I'm not calling a bottom yet. I'm just labeling it a bottom right now as a promise until this fails. The problem now is we are either in what's called a running flat, which is the red 2, or a diagonal, or we actually don't have anything bullish at all because we only have 3 waves off the bottom. So if you can see, I'm counting in 3 waves. And if we don't complete that 5th wave, we have a serious warning here that we're going to see further lows. So honestly, I don't know. It's just promising. Now, this wave 2 is 50% retrace. So it's actually very high. So there's a room in Ethereum to go a little bit lower, but there's no room in Bitcoin to go lower without it really breaking down into the 4,700 region. So it could stop at 5,000, et cetera. We have lots of confluence down there where it could potentially stop, but I would bet that 4,700 has a good strong chance of getting hit if we break through the recent lows we've had. And I'm measuring that at 7,075 or 7,085 is the warning zone. We went down to 7,041 and then got a quick bid, but break that again and we're done. We'll hit the 47 zone. So hopefully that, or likely that's the way I see it. Let's see, from Hoser, who started this whole game. Altcoins, they usually top out at typical thirds, such as 1618, or they often overshoot. Yes, they often overshoot. So I wrote on that last night. You commented on that post, I thought, maybe not. But it's very common for all coins to overextend based on the 1-2 setup that we get. They tend to have a shallow 1-2 and then blow up. It makes life difficult, but we can really mark that breakout point as the 618 extension off our 1-2. So that's typical to all things. So once the 618 is broken to the upside, and let's go back just real quick and review that. Where is that? There it is. Okay, so let's just review that one time because I think that a lot of people want to learn Fibonacci's better. So again, we have a 3-point fib tool. So this is an example. This one too, by no means suggests that this third is going to be that high at all. However, we got a breakout point. If I put the fib tool here, we got a clear breakout point at 618 at 846. So we knew it was going to likely go once we broke that 646. 846 at the 618, which is right here where my cursor is. So, and then certainly it extended. And so there's nothing about this that suggested, because you can see right here that the 618 would have, 1618 would have topped that third here. And instead we saw it here. And again, the way I manage that is I crawl my fibs up and I don't get out until I see a deep hit, nice deep 4. And again, that's how I'm working the long-term chart of Bitcoin as well. I'm looking up into breakout spaces in Bitcoin unless 3,000 breaks, because 3,000 is the 50% mark of our progressing third wave off the 2015 bottom. So until that, it's just working a different fractal. So until that breaks, I'm looking up, and I don't think this thing called winner, which I sometimes regret naming, happens until 3,000 breaks. It's the same thing I would be doing here. I'm not looking for a top in the short-term fractal until the 50% gets hit, and it never got hit until back here, but we had the warning of the 236. So hopefully that makes sense. So yeah, cryptos, to answer the question again, overshoot on the third wave off the 1-2 setup projection quite often, and so we use a different fib system, or I do. Let's see, so that answers that, and it's all cryptos, not just alts. I mean, the Bitcoin is the same darn thing. So yeah, someone asked what the green line is. Green line is again 618 of the peak to trough off the May highs that I'm using to help me confirm that the May low that we had, May 28 on both coins, is a bottom. So until those green lines are crossed, I can't say with any level of confidence that we have a bottom, and I'm just tracking it as a bottom until it confirms, and then or breaks down, and then it also has to be 5 waves in structure and not corrective like a B wave. So because we can come right back down as a C wave once we have a B wave. So hopefully that makes sense. We can do that right now on this chart right here, just so we emphasize. So you guys can't see that. Let me go to the black chart. So just bear with me a second. So we have a May peak, and we have the potential bottom, but we don't know, and we certainly don't have 5 waves completed. So it's usually that you see, sometimes it's the 50% and sometimes it's 60%. So on this chart, I would, just to be safe, put that green line here. It's just a marker. It doesn't mean that it's a bottom confirmed. It just means probability increases, and then it's further looking good if you can see right here that we have 5th wave projecting right to that line, which is kind of interesting. That works out, but and it often does. But this has to complete, and we still have a potential setup to get there. And until this goes, there's no reason that this bottom, this bottom will hold. And even if it gets to the 5th wave, I'd say probability is much more increased that was the bottom, but we don't know until we've corrective wave down, stay corrective, hold support, and then break out again. And it's over that 618, which I don't have on this chart, but it's over that 618 that we get to the next level of confirmation. So hopefully that makes sense. Any more questions before I hand it to JAppel? I don't know if I got them all. You may have to retype. I'll give like maybe 15 seconds before I move on. Okay. I'm going to hand it to you. It sounds like you're on, Jack. I think I can hear you.
Yeah, I'm here. Can you hear me?
Yeah. Let me figure out how to get you to share your screen. Let's see. I've never done this. Make presenter. That should work. All right. I think you can share now.
Okay, let me see how I do this.
Let's see, I don't have the button anymore. You should see the button though.
Let me see. Oh, okay, here we go. Screen 2. Okay, great. Is my screen up?
It might be refreshing. Let's see. Yep, can see it.
Okay, great. It should be an ether chart here, yeah?
Yep.
Great. Okay, so I'm probably going to talk about three areas here. One is going to be my approach. The second being some crypto specifics. how I look at Elliott Wave. A lot of it has really been learned from watching Ryan and reading his posts and just doing hundreds and hundreds of charts and seeing that Elliott Wave does tend to work really well for giving us ideas of where the cryptos are going, but it sort of takes some specific tweaks, especially for what we consider to be standard levels. And lastly, I'll talk about some of my approaches for analysis, where I start and how I'll hone in on very specific levels, specifically when I want to go bottom hunting, which quite honestly I can't recommend, but is something that have done with a little bit of success here on my leveraged crypto trading account over on BitMEX. So the first thing I'm doing for approach is I think the biggest thing is to manage your cash position. And by cash, I mean fiat currency, how much you're keeping available and how much is at risk, whether it be in Bitcoin or big cap alts or small cap alts. I think this is of the utmost importance. As we see here, anyone who was around from the September bottom or the November bottom, when the market's moving, it does tend to be very directional across all coins. When Ryan and I will post on the site about how the market's starting to decouple, that doesn't necessarily mean that the market's decoupling in a directional sense. It just means that a lot of coins are at different parts of their counts. You may see, one coin may be in a wave 3 and have a very big move up, while another coin may be coming up in a B wave of its correction and have a smaller move. So I think, a good place to start from is how much risk you have in the market at any given point. We're sort of trading a one-way market here. There's not a lot of, this is not like trading futures where, on the indices, for example, where, it's plenty easy to bet on up or downside. It's fairly difficult here, especially if you're keeping a broad portfolio. That's the second aspect to my approach here. Is as crazy making as it can be to try and keep track of lots of coins. And I can tell you, regularly I get messages from people on the site asking me, what do I think are the best 5 coins, or which 5 coins are gonna moon this week? And I really, there's a lot of ways to skin the cat here. I feel strongly about doing an approach where you keep a really broad portfolio. The issue being that, like, with Elliott Wave analysis, we don't really have a good idea when a coin is really going to take off. We can get a gauge, gauge of time by looking at a chart and seeing, well, this is a really, elongated 4th wave, or this wave 2 correction is going really long. But we don't have a high degree of precision with this analysis tool. It's not very adept at that. And then, a lot of these coins, that there's a discussion about a lot of these coins that, they're going to go away in a couple of years, and a lot of them are pump and dumps, which may or may not be the case. We don't really speculate about that. Personally, I know next to nothing about most of these coins and what they do and their uses, etc. But as we've seen, like, there's a lot of days where, a coin may take off and have a, enormous move, and sometimes it sustains and sometimes it retraces. I find it to be rather unpredictable as far as timing. And so I really think it's an important thing to keep your portfolio broad. You want to find coins that are maintaining good impulses in their US dollar accounts. Some of them are even maintaining impulses in the Bitcoin accounts, but that tends to be a more difficult approach to this trade, to be trying and out gaining Bitcoin at various points in time. I think it's a more successful approach to track all of your coins against the US dollar and make sure they're maintaining impulses. typically what I will do is I will go through my Blockfolio, which is, kind of where I keep track of all these coins that I have on different exchanges. And I will go through the charts, and I start with sort of a daily count on everything just to get a broader view of where we are as a whole. Like one of the things I may do if I'm looking at a brand new coin, which oftentimes will come from looking at BitTrax or Binance, biggest movers or biggest losers on the day, and I'll get curious and pull up a chart in TradingView. I'll usually start with a daily or even weekly count if it's a more mature coin, and run a count on that. The way I usually start with that is to just fib what's called fib slapping, which is basically just wave slapping, which is basically just to label the chart just with what I think it is without doing any Fibonacci's. I don't find that to be a very valuable tool. It just gives me sort of a guidepost. Now, what I do then is I will look, for micro 1-2s and start to look for, major tops to coincide with various Fibonacci's. And from that point, I usually can dial in a pretty reasonable count. And I'll move in then to probably like a 4-hour chart. I find that kind of to be the sweet spot. I know a lot of people have a tendency to, want to look at a 5 or 15-minute charts. I think, I really think even if you're trading at a smaller time frame, you're going to lose a lot looking at that fine of detail. It's easy to lose yourself in the chart or to get focused on very small stuff and miss bigger trades. So I like that 4-hour time frame. And essentially what I'm doing from there is I'm going through my charts, and TradingView has a nice tool that allows me to put alerts on. And I put alerts on everything. I mean, there's no way to remember, what's the 50% retrace of a third across, 40, 50, 60 different coins. So I just label it, and, and that way I don't have to stay glued to the computer all the time. I find that better than putting stops in place too, as this is a market that has a lot of slippage to it. But with the alerts, I might get an update on my phone that says, oh, okay, like this thing has crossed 50% retrace, and then it tells me, that, okay, maybe an impulse is breaking down. Similarly, I'll use it for my entries. After we had a good wave one off the April lows, I ran retracement fibs once we got confirmed tops in most of those coins, and basically set levels that I want to participate, which our standard retrace in Elliott Wave tends to be between the 382 and 618. So see if I can give an example here. Let's see here. This is an interesting coin here, our REQ. We'll may want to talk about this one for a minute later, but so you can see here, this is pretty far zoomed out here. I have it up as a daily chart. I have a nice 5 up here, and we've got something of a correction on the way back. It's not a clear zigzag, or it doesn't fit any clear corrective fractal, which really doesn't have to happen in Elliott Wave. Corrections tend to be variable, and so they're often unpredictable. It really is often where you can see someone's skills as an Elliott Waveitician, as we're going through and trying to count these crazy corrections like we're getting in a lot of the bigger coins like Bitcoin. But one of the things I'm going to do is just a broad stroke from this is once we get a confirmed top here, I'll put fibs on, and I'm looking for a retracement into this zone here. And because I'm looking at so many different coins, I'm probably not going to micro count something unless I'm seriously bullish on it and going to allocate a huge percentage of my portfolio to it. And so, I'll put one alert here at the 382, one alert at the 0.500, and one alert at the 618. And I will probably write up here, for example, I'll show you as an example here. So this is around 30 cents here, the 382. I'll put 30 cents in, and then I'll write in the notes, let me say, like maybe I'll calculate that at that price. I want to buy, I don't know, let's say like 5,000. This is just an example. But I know then when I get this alert, I don't even really have to think about it. I know 30 cents is hit. I can go into my Binance and buy 5,000 of them. So that's more or less how I handle that. I want to come back to just generally the approach as far as managing cash and the position sizes and how I'm determining to buy 5,000 or whatever number I'm going to determine to buy. So for me, I want to get as pretty close to fully allocated as I can once we have a confirmed bottom in place. For me, like right now, I'm at a place where I'm sitting in about, I get about 15% in cash. That's a little bit less than I would like. I don't know if some of you looked, but I posted just before the webinar my updated Bitcoin count, and I'm a little concerned and leaning more towards a move down to the 5,000 to 5,400 zone to finish this out. And we can come back to that later if any of you have specific questions about my counts. For position sizing, one of the things I do here, I'll show you this this spreadsheet here. This is a spreadsheet that I made off of the April lows, and essentially what I did was I looked at all the coins that I thought had good 5-wave moves, started with those, and would divide the wave one high by the start of the wave one, and that would give me essentially the multiple. And then I rank these in order of multiple. The reason I do this is going to give me an idea about allocation. When you see Ryan post his skew table, he's posting at a little bit longer time frame. It's 1 degree greater than this. At this degree, though, this gives me the idea of which coins after a retracement are going to perform the best, which ones are going to have the biggest moves, assuming I'm getting in as close to the bottom as possible and riding them up to a 2.0 or better extension for my exit. And then I will make decisions based on a few sort of planes. One is this issue, the multiple or the skew from the high to the low, and then it's going to be where is it as part of a greater count, or how confident am I in the count? So one of the things, for example, is like let's take Yuan Chain. I own quite a bit of this coin. It's one of my bigger holdings right now, and the reason being, here I'll pull up a chart on it. Sorry, here, going to zoom out a little bit. This one has a 5-wave up, and it doesn't have the robust history like a lot of the others do, but it has a solid 5-wave move off of its low, and it has a very good skew. So I thought this would be a good one to play for this next move, for this next move higher that we're holding. If it doesn't hold this low here, or it starts to break down, significantly, I'm probably wrong on this, and maybe I'll move this into another coin. But essentially, the more data we have, and the more confluence we can build off of bigger time frame counts, the better results we're going to get. But if I was just looking alone at skew, Yuan Chain here is in my top 10, but I'm not loaded up on it as much as I would be as something like BitShares, for example, which has a couple things going for it. Number one, it has a more decent history to it, and number two, it has this big skew, and it has a very good count that we're confident in. All that points to good reasons to own a lot of this coin. And so for me, this is my biggest alt holding here. SC, for example, while it has a huge skew, as I have labeled here, it may not be a perfect impulse on its way up. And so this may be something that's more likely to just get an ABC up here rather than to extend to a 2.0. So even though it's at the higher end of the list, I'm not going to own as much of this one as I would per se like Juan, for example, or SNM that have better impulses on the way up, where I have a better expectation of those things reaching their 2.0 Elliott wave extensions rather than just reaching like a 1 to 1.382. The last thing I want to talk about as far as the approach is rotation. It's something Ryan discussed a little bit before. I'll come back to REQ here. I think this is a really interesting chart. I was pounding the table pretty hard on this one when we got into this region up here. And one of the reasons was that we had this low down here, the March 18th low, and then we had another low in April that almost retraced the entirety of it, which generally does not bode well for making an impulse. And then I think we came right up to about, here, I'll put this up here. Yeah, we came right up to, I don't know if you guys can see this, but this is right up to the 1.0, and then we failed below the 0.618. So one of the things I'm doing is I'll draw these fibs in, and once we get above the 618, especially once we get to the 1.0, I'll put an alert in at the 618, because basically at all times, once you get above the 1.0, price needs to remain above the 0.618, or we're getting a good signal that it's sort of an early warning that we're getting a breakdown, which is exactly what happened here. So I posted, when was this? This was back in early May, but I had exited the lion's share of my REQ position. The interesting thing now is that REQ went and made a lower low than the March low. We have no evidence at this point that the correction is done, but we don't have to look at this as a low anymore, and we can zoom back out, and we're still just looking for a bigger wave 2 off this initial 5 up. So and this is one of these coins that's just going to have astronomical skew just based on how big the first 5 wave are.
Yep.
Hello?
I was just saying yes.
Oh, yeah. So this is a coin that I'm, even though I'm very light on it at this point, I think I own I have like 1,000 of these, to be honest, which is I don't know what that's, $132 at this level here. There's very little in this coin, but once we get an initial 5 waves up, and I would probably look at I'd probably come into even like a 2-hour chart for something like that, which, we have nothing here that looks terribly impulsive off the low. You could call this an impulse potentially, but this is really too small for me to care about. At a minimum, I'm going to zoom back out here. I want to see something that probably takes out like this high here at this level.
Like you're basically saying the preceding 4 up, right? Like whatever the
yes, exactly. So while this count on the way down is pretty amorphous, we could potentially count this here as a 1, 2, 3, 4, 5. So one of the things I'm just eyeballing that, but if we take out this peak, we have a clear trend change at this 8-hour time frame. It's more significant, obviously, to take out this peak, and it gives us more confidence, but then you're paying potentially 2x on the coin. And my trading style, personally, I'm hyper aggressive, I'm hyper active. I like to look at a lot of coins and trade them aggressively. I will trade aggressively to try and buy lows. Again, it's not something I can recommend as a style. I've lost lots and lots and lots of money learning to do this, to get to a place where I could do this consistently, profitably. I don't recommend anyone to go through the journey I had. And it's why, especially for those of you who are members of the main room, you'll see Avi always waiting, always cautioning towards getting in before you see like a micro 5 up or a micro 5 down to confirm that we have some trend change in place, and then buying a retrace or even buying a breakout. It's just not my style. I don't like buying breakouts. I prefer getting like a good position on at lows, and I trade very well at that, and don't trade as well once the move is more mature. So back to REQ here, though.
I was going to say real quick, just because I know Avi's trading a little bit, maybe more intimately than some. And Avi's obviously saying that, obviously from what I know about him, is saying that for new folks who are learning how to trade, looking for that confirmation is just safer. But I know him also that he'll pick off bottoms too when sentiment gets really washed out. I mean, you do that. I do. I haven't done so much of that this round personally, but I've popped trades on the board when I saw the sentiment was getting really funky. So it's still like, I'm just saying this. Avi does a little bit of both, but he's still recommending to new folks learning, look for that 5 up, wait for that 3 down, and also look for a 5 up. In my opinion, if you want confirmation, you get it over that previous 4. And even more so that green line that I'm using, which is 618, the whole retrace. But like you said, you're paying a lot more than if you had picked off the bottom. So
yeah, exactly. So again, like Ryan's saying, like I will hunt more aggressively for lows when I have just a sense from the room, and I'm a member of numerous Telegram pages, and you can just sort of feel the sentiment in there. People getting really bearish or getting really antsy or really negative. I may hunt a little bit more aggressively, but I'm still going to do everything quantitatively. That's kind of how I am, and I want to go in and I'll come to this in a few minutes, but I'll basically look for like areas of big fib confluence. The issue with rotation here is once I get a 5 up in here, past this, I'll probably put an alert on something like this and come in and see if we have an impulsive move through it. I'll start to get interested to buy more of these. Now, as you know, like we have other coins like Ether and GNT, both of which I like very much, that are further along in their patterns here. And so one of those things is going to be to do something like this here. So I'll open up GNT real quick just to illustrate how I may do this. Zoom out here. Okay, so I have my GNT fibs in place, and one of the things I'm looking at here now is, I have my initial 1-2. I didn't count this spike up here. I don't do stuff like that in the cryptos. It may be a real move that I should be counting. It is just sort of an issue of like the wild west that we are dealing with here, that you get a lot of what's called slippage in these charts, where you just get bad prints or there's no volume up there. It's a judgment call that I make, and I'm not considering that the top here. Instead, I'm counting this as a 1, 2, 3 just to here, 4, and then 5, and then we have a nice wave to pull back. And then this looks potentially like a micro impulse up, but for it to be a 1 of 3, I'm actually looking for it to come into this zone. Essentially, though, on the time frame I trade, I would potentially get out of take some profits, but in this zone here, the 1382 to 1236. I think Ryan's probably doing something like this if he had more time, but managing a room and looking at all the charts and taking all the requests that he has and having to be online all the time sort of disables this. But I may look to take some profits here, because this is sort of the general region that we're going to have the part of the third wave is going to target. Not to mention, one of the things that is going to separate a B wave between getting like a B wave here and then getting a lower low is this region. This is sort of the resistance region you guys will see me put on my charts. Making it above here is evidence that we have like a really solid impulse at a bigger time frame.
Actually, let me add real quick. I was gonna say, if we have a diagonal, that is the zone for a third right there as well. but also like you said, B wave top in that zone, the high ones. But you know for them from the structure going into it, usually that it's almost the same as a diagonal. So if you start to see a three wave move into that area, you got to take profit. So
Exactly. So, once we get into this zone, I'm usually looking to take profits here, depending on how much basically mental energy or bandwidth I have. I'm potentially even taking stuff off at the top of one of three. So meaning like I'm looking for this. This is a wave one. We have a wave two, probably a three here, a four, and then a five into this zone. I'm potentially going to take profits there because I'm probably not going to do it on like a stock chart, but on cryptos, we're looking here. Let's say we get a standard 618 extension. Our pullback is probably going to come into this zone here, which is about 50%. So, if you have a few $1,000 in this coin, you're taking a pretty significant drawdown here when it comes back down into your wave two. And I've seen that some guys are, losing their positions here in this region when they see this wave two drawdown. And this is really a place that if you don't own any of these or you want to buy more, you're accumulating after this touch of the 618 or the 764 and it comes into the zone. This is really where you want to get a lot of position on here because now you're getting the strongest portion of the move. And at this point here, after you get to two of three, you're going to come up in the three of three into this zone. A lot of times with cryptos, just because we get these insane extensions, it'll blow right through here. So, I'll be watching these charts closely, and I'm always going to take something off here in this like 1236 to 1382 zone. But I will just watch order flow and price action and the technicals. And if everything looks like basically this is, like a crash to the upside, I might be really light in how much I take off. I'm not as I don't have as many rules about this as Ryan does, where he's taking like a guaranteed 30% off at the top of a third. I may just take off a little bit here, and I really leave it up to my discretion and to my instincts. And then if we get a four of three, back into this zone, I may add a little of those back. And then we get up to the five of three north of 1618. I'm going to take some more off there. And at this point, I'm going to cut a lot more aggressively because even though the wave, the fifth wave may come up even higher, and that may be a 3x move, now I'm looking to do the rotation that we're talking about. So then I'm going to come back to a chart like REQ, whereas like GNT, when we get to the top of the third, we're at 680 here at this point. Now, like a standard retrace is going to bring this back down to 230. So I'm talking about a 66% drawdown where I'm only looking to make about 2x from that point. Whereas REQ at that point, maybe we get a wave one up and my, a wave two retrace is risking 66%. But now I'm at the base of an enormous move here where I'm taking the same amount of risk, but my reward is just astronomical. So, let's say this were to bottom at the 618 here, just for sake of argument here. If we get a wave one here, let's say, we get this wave one during this time up to $1, I might buy a wave two pullback at like 50 cents or 40 cents, and I'm risking, like about 60 to 80% on a pullback there, if I let it go all the way. But now I'm targeting, this Fibonacci right here for some, and targeting this Fibonacci for others. I'm getting in at like 50 cents and targeting $18 and $42. Now, now we're talking about 30x and 50x returns. And I'm doing that with the profit from GNT, and that's how we make use of the rotation trade. And you can really just make astronomical money here with these types of rotations here. You don't need to worry about a coin coming to its 2.0 extension and being the hero that took out the 100% of the move. It feels really good and it's great for your ego, but if you want to make more money, this rotation is really where it's at. And as we get into a third wave here and start going up higher, Ryan and Zach and Gott and I will definitely be posting these trades as we see them. Which are the laggards, as Ryan calls them.
Yep.
Let's see. So we talked about I just want to reiterate again, this Fibonacci zone here, in cryptos, normally in equities, I give things to about the 1.0 to 1.236. Once you're above the 1.236, it's pretty clearly an impulse. In cryptos, everything is sort of phase shifted up one fib, where oftentimes in stocks, you get an extension of 0.382 to 0.618 is your wave one of three. In cryptos, you typically get 0.618 to 0.764. I've even sometimes okay calling a one of three a little bit north of the 0.764. Once we get up to the 1.0, I'm a little bit more concerned about just having a three-way ABC up. But assuming, you get...
I was saying cryptos, I think we have a lot of 764s for one. I think it's really, really common. Just experience.
Yeah, that's definitely true. I mean, like, one of the things I've seen, just looking at hundreds of these and queuing off of Ryan here, is that like the 764 is really kind of the sweet spot for the one of three. The 1382 is really the sweet spot for the three of three. Five of threes I've found have a lot more variability, which is one of the issues we have as you see some of us discussing, what is our next target for Ether. Ether came and hit 1411, like on the nose, which is the 1.382 extension of the bigger one too. And now the question that we basically, we held the 1.0 extension is, what's going to be our target for 5 of 3? Is it going to come up to what was that here?
It's 35 or 6900.
Yeah, is it going to come up to like our standard target, which is the 1.618, which is 3,500, or is it going to come up to the 1.764? Or even we're talking about, and this is not unheard of for a 5 of 3 to reach the 2.0 extension once your 3 of 3 reaches the 1.32, and that would be very good for all of us as we're talking about at that level a 16,200 target for Ether. But essentially, like, for me, this is an extremely important zone here, because if you see price come up here and get turned down, that's not unexpected, because that's what that's what happens at a 3 of 3. But if price then breaks down below the 1.0 and then below the 764, you have a pretty big warning at that point that your impulse is not going to happen, and you should either be reducing your position or jettisoning it altogether and putting those funds back in US dollars with other coins.
Yep.
That about covers it for me here. I guess the things I want to leave everybody with here is, like, I see a lot of people posting 15-minute charts. I really, especially with cryptos, like, I really think it's a great idea to zoom out. Keep at least 1 hour as the short time frame chart that you're looking at here. If you get very good at doing Fibonacci at Fib Pinball, I myself, I will use 5-minute and even 1-minute charts when I'm bottom hunting, but I start from 4-hour and 1-hour charts to have my bigger fib levels, and then I will micro count it or even nano count it to look for areas of confluence. And confluence to me is the name of the game in Fib Pinball. You see, like, if you see a 3-wave retrace that has an A equals C relationship into a 618 retrace, that's important, and that more often than not, that's going to be an area that you're going to want to trade. And if you're looking for stuff like that and being patient for stuff like that, that's going to get you into really good entries on stuff where, if you get a little bit of a bounce, you're not sweating it. Like, I saw a lot of people, getting into a lot of people on my Telegram page starting to rebuy into Bitcoin on this move down around 8,500, and I was trying to caution everybody, like, look lower, look lower, look lower. I got averaged in after everything around 7,500. I actually just got out of those because I have my concerns about the move back down here based on the price action. I'll actually come into that chart and just walk everybody through that. Bigger picture here, we have a really messy correction off of the December high. We've all had our issues counting it. Ryan's had a couple of different WXYXZ, which is a really unusual count, but somehow turns up in cryptos. Arcadi has, it's essentially a pretty similar count. The way he's counting it though is that we're getting an ending diagonal C. So this is a big A wave, and now we have 1 of 3, 2 of 3. And we're currently in a an A or probably a B of 3 at this point. We're all sort of, looking down in our more bearish counts to a similar level here, though, in the 4,500 to 5,500 zone. One of the things I'm big on is confluence, though, and so I'll come in and just look for relationships really at any extremes I can. This one thing that I did today actually was to look here. I'll clear out these others here, and I did this here. Measuring from the top to this fib level, if it's a WXYZ, one of the things you look at is for the W and the Z wave to be of equal proportion. So I have that as my control, and then I came up here, and one of the things I noticed is like, okay, this gives me a 1.0 extension at around 5,400. Then I came in to do 11,771 down to 6,404 up to 9,970, and this is massively interesting to me. Look, when I put that on, the confluence is almost perfect. I mean, those are like, sorry, it's hard to zoom in here. Those are, so one of them's at 54.26, the other one's at 53.92. For cryptos, I mean, that's nothing. I mean, that's like perfect confluence. The other way I'm counting this as a potential 1-2 down here, when I zoom in on that and put this count up, and look at that. So this is a C wave, which we're looking for an impulse, and our typical target for an impulse is 2.0, and boom, look where that lands, like right there at that level. When I see confluence at three different sort of reference point that's at this level, it really gives me strong belief that this is like a magnet essentially for the market, and we need to sort of beware of this until we see a solid impulse up. And so for me at this point, like I need to get a movement above what's this level here? I need to get a move above 86.10 that's impulsive to really give me good confirmation of a bottom. Then I'm going to move here from my daily chart to my 1 hour chart, and I'll tell you that this one really kind of scares me as well. I'll show you my levels here.
By the way, this is exact bearish count I posted. I'm seeing the exact same thing. I posted it about a couple weeks ago. If because I'm looking at the whole market and seeing potential bottoms. For me, it takes 7060 to break the one that you've got at the bottom there to confirm it. But yeah, no, I mean, I posted this the other day. It's pretty strong.
Yeah.
I think triangles and diagonals, all that stuff can play in too. But yeah, for sure, if this area goes, then it's kind of given.
So on the micro count, the one thing that really concerns me about this is you can see we have an initial. This is a potential impulse up here. I mean, this looks really good as a micro. 1, 2, huge extended third, 4, 5. And so I'm going to count 70.60 to 75.69. And then we have a nice three-wave pullback. A, B, C has perfect structure down to 72.72. So I'm using that as my 1-2 here. And then, sorry, TradingView has issues with the labels sometimes. And then notice this, we topped a couple of days ago right up at the 1.0, which is okay. It's not great, as we have an impulse up here into the 618. This could be our 1 of 3. But when we topped up here and now we move back through the 618, it tells me that the best we're getting here is well, we could have a series of 1s and 2s. We could have what we call nested or even nestled from Harry Dunn from the main room. That could be nestled 1-2s. At this point here, I'm betting those aren't nestled 1-2s. It could be here though. If we see Bitcoin just take off here, if it just rockets up from here, then that's going to be probably our best perspective that we have nested 1-2s. And then my initial 1-2 is not really going to matter, as Ryan talks about how we get extended thirds. We're really just going to probably come over into this potential 1-2 over here. and look for counts off of that to gauge some levels as to where this third wave is targeting here. But that's the most bullish. The next most bullish count we would have off that is that we're forming some sort of like really funky diagonal where this was wave 1, 2, this was our 3, this was a wave 4, and our next high is going to top this in the 1,236 to 1,382 zone. And that's going to be our initial wave 1 up. I have a hard time trusting that, especially because that's not going to take out our resistance level at 8,600. And so really, like, unless this rockets up here through 8,600, confirming that we have a bunch of nested 1-2s, which is possible given the structures that a lot of these look like impulse up, corrected back. Unless we get that, I find this very concerning that we came back through the 618. And if basically, like, if we get below this low here, this 74.75, or especially if we get below this low, this 73.50, and then this low 72.72, and then this low the 70.60, it's basically confirmed that this is we don't have a bottom in place, and I'm strongly favoring the bearish count then taking us down to 4,500 to 5,400, which essentially here when I look at my blue fibs, that's what I'm looking at here, the 1.0 to 1.236 extension. That gives us 44.85 up to 5,400 essentially. And so that's where I'm going to be targeting. Full disclosure for myself, I actually just got out of all my long positions before the webinar here at around 76.75, and I'm sitting flat in my leveraged account. And if we get something that appears to be like an initial 5 waves up, I'm going to look to short actually with a stop above this zone here. Right now, it may be like on a risk reward basis, I might be being foolish, that, like essentially I can have a stop right here at this level and, like for a potentially much bigger move, but I just don't like the structure of this. It's just a personal opinion as a trader. I might be way wrong, but there's always another move to get back in on. And like I said earlier, like I have massive exposure here. I'm down to under 15% cash. And so I actually feel okay getting out of those, given that we don't have like a Goldilocks setup here. I'd rather wait for an initial 5 up and then Bitcoin to get on board with where the rest of the crypto market is, where we have a lot of beautiful 1-2s off the April lows. And once I see that in Bitcoin, I would feel very good deploying a lot more cash and getting very much more invested and putting on some aggressive leverage positions. So, Ryan, that about covers it for me here.
Cool, very cool. Hey, I was just pointing out just real quick that I have this as a running flat if bullish, and we had that top at 1.0, that would be a B wave top, and then 5 down to 7.344. That's the C wave. So it's not a bunch of 2s, but a running flat. But yeah, if 7.34 goes, I'm totally with you. I'm actually quite nervous about Bitcoin, but I'm letting the rest of the market kind of tell me, letting it.
So you have this as the wave 2 bottom right here.
Yeah, because so you've got the first initial impulse. Mm-hmm. That would be a 1, right? But then we have 3 waves up to the 1.0, or I guess you're showing as a 764 right now. That's 3 waves. That's a 3-wave high, and then 5 down. It's a pretty clear 5 down.
Yeah, and then it's like it's retraced almost the entire thing here, which is almost invalidated it.
Yeah, I'm saying if bullish. I mean, I'm not convinced that we have that, but if bullish, that's what it is. We saw a lot of those in October. So and I remember having to shake in and out of them a bunch of times until he took. So anyway. But we'll see.
Yeah. To be honest, the way I might play this also, because I'm sitting flat here, is I might do what I rarely do, which is to get in on a breakout of the 1.0 and then move a stop below this wave 2 here at 70.55, and that still positions me very nicely for to get in pretty low. I consider that for a small trade. I had a pretty large trade on at long from 7,500 region. It was probably trading too big for this region without it like a confirmed bottom here. So.
Yeah, I'm with you. No, I'm with you. But if 734 goes, we're probably sliding hard. I'm totally with you on that. Anyway, I think we have to sign off in 5 minutes because the schedule. There's just two questions I want to answer that are floating on this, and then if any other questions, post on the site, please. If you're from the public, we open this up to the public again. You can come in and get a 15-day free trial. That's, we don't track credit cards, so you don't have to worry about it. But if you don't really want to do that, just go ahead and DM me on Twitter. Besides giving charts out on Twitter, I will answer questions at least for something that you heard here. DM me instead of tweeting me. But just real quick, a couple questions. One was, I think it was looking at your chart, but I have the same thing, JAppel. It's that an A wave has to be 5 waves. Actually, we don't view it that way on Elliott wave. Actually, most A waves we observe in the market are 3 waves. So 3, 3, 5s is what we see in most common corrections. I don't even remember now what Prechter had wrote about 10. I read it about 18 years ago. The first time he may have said 5, 3, 5 for all corrections. We actually don't view it that way. But actually, what's funny is in this last 5 months, I've seen more 5 wave A waves. So 5 wave A waves are possible, not necessary. I've seen more 5 wave A waves, which has made this correction particularly hard since my whole career in Elliott wave, which is doing Elliott wave analysis, which is about approaching 4 years now. So yeah, it's kind of interesting. And then the other was someone asked how do we recognize Elliott wave counts like NEO to Bitcoin? I don't have time to pull up charts in 5 minutes, but NEO is we count it as in a major wave 4 right now, with the next top being a 5th wave top. Potentially, that's the way I count it anyway. Looks like JAppel is bringing it up. He may count it differently. That's the way I see it. And then Bitcoin is in a 4 of its 3rd, and the next wave is its primary 4. So if you think about that, we got to get very deep correction in Bitcoin coming up, deeper than we have already, which it feels very deep, potentially all the way down to 200, but probably will at least go from 65,000 to 3,000 is sort of my gut right now. We have to see what the setup is, unless 3,000 breaks first. And NEO should put in a major top. You've got that. Yeah, there you go. You got that 5th hanging up there on your chart. You got it.
Yeah, I'm really of the mind that like it doesn't tend to be a great game plan to try and count these against Bitcoin. There's a few points. EOS has a really nice setup right now where it's holding really good Fibonacci's for this is my EOS BTC chart.
Yeah.
For the most part, I stick to the dollar charts.
Yeah. No, I'm saying 5th. NEO has a 5th wave on the on its dollar chart is what I'm saying. And then so the NEO USD has a 5th wave coming. That's the way I count it anyway. And then Bitcoin has 5th of a 3rd, and then Bitcoin's 4 can be massive, and NEO could go into primary wave 2 down. Doesn't have to be really deep, but it could be protracted, and that's where you start to see confluence for the next, like confluence in time, so to speak, if you will, for the major top coming in. For all coins can be in a different degree, but still correct for the same amount of time. Ethereum could be in its 2 down. We could have EOS in its 2 of 3, which actually can be like a 90% cut. So we can go on and on. After this top, we probably have a lot of real deep correction coming, is my point. And that's how we reconcile it. At least that's what it's showing right now. I think some coins will challenge that. I think EOS might be one that challenges that idea. BitShares is another. So that's how we can reconcile it. So anyway, hopefully that answers the question. You can answer, again, I can answer that. If you are a member, I can answer that on the site. I prefer you post questions versus PMing me because I get overrun PMs any day. But you can go ahead and do that. And then if you're public, you're in from the public and you're interested, feel free to DM me on Twitter at RWILDAY is my handle. Although if you're here, you probably saw my tweet. Again, I'm not trying to peddle you into the room. It's not right for everyone, but certainly if you're interested in Elliott Wave, interested in trading cryptos using Elliott Wave, we teach it pretty well. First through the webinars and second through just ongoing interaction with us. So I just want to say, and I mean, I think that's all I have, JAppel. We probably got to sign up and we got to sign off in 2 minutes. Anything else? Any parting words?
Well, I would tell everybody zoom out and don't get too wrapped up in all the sentiment out there. The chart tells you a lot of stuff about this, and if you learn this discipline, you can really be successful with this.
Yep, agreed. It's paid off, that's for sure. So anyway, thank you everyone. Again, we'll see you in the room. Any questions? I'll be on the room at least an hour before I sign off for my day. So I'm happy to answer any questions from members there. So, and I'm sure
I will be as well too. So
awesome. All right, thanks guys. See you soon. Bye bye.
thank you.